The UK has just lost 109,000 jobs in 1 month, and that might just force the Bank of England to blink. Is another base rate cut finally on the cards? This week we've had a mixed bag of news across the mortgage market. Barclays and HSBC push rates up, Principality trims theirs down, the mortgage works getting landlords a little bit of breathing room, and the Bank of England might be cornered into cutting the base rate after alarming jobs drop. And the government's mortgage guarantee scheme is coming to an end, but is that even needed anymore? Let's start with rates. So this week, Barclays and HSBC nudged rates up, continuing the trend that we've seen from a few high street names recently. No huge spikes, but enough to make you pause if you're thinking of fixing. Meanwhile, Principality has gone the other way, lowering some of their rates, but giving borrowers a window of opportunity. A few other lenders have made tweaks too, some up, some down, so it really is a mixed bag out there. Now for landlords, some welcome news. The mortgage works have cut their stress test rate by 0.5% for those borrowing at 65% loan to value or less. That means in real terms that many landlords could now potentially borrow more, especially those looking to remortgage or expand their portfolios. If that's you, do you think this change has opened up some new possibilities for you? Plus the wider economy, and I have to say, it's looking quite shaky. ONS data shows payroll employment dropped by 109,000. That's 109,000 fewer people in work. It brings the annual fall to over 274,000. The job vacancies, well, they're down to the 35th consecutive quarter. That's 3 years of constant decline. So what's behind all of this? Well, it's a combination of factors. You've got the higher minimum wage, increased national insurance, and possibly the government's heavy investment and push into AI and automation. This could be shrinking traditional jobs faster than expected. It's leading some experts to think that the Bank of England might cut the base rate at the next meeting to soften the blow, but they're still between a rock and a hard place. Inflation's still hanging around like a bad smell, so a cut now could make it worse. But I'd love to know what you think. Should the Bank of England cut the base rate at the next meeting or keep it on hold? Meanwhile, the mortgage guarantee scheme officially comes to an end on the 30th of June. This was introduced during the pandemic in April 2021. With the aim of helping buyers and home movers with just a 5% deposit, it ended up helping around 53,000 people, which isn't that bad, all things considered. It was due to end in 2022, it got extended, and now it ends at the end of this month. But Rachel Reeves has recently announced that it's going to become permanent, and that raises their question. With lenders bringing new options to the market, such as 100% mortgages or mortgages where you only need a £5,000 deposit, is the new scheme needed, or is it just political window dressing? Finally, a word on GDP. The latest data shows that the UK economy shrank by 0.3% in April. And while Trump's tariffs play a small part in that, let's not kid ourselves, domestic policy has a lot to answer for. Rising taxes and tighter business conditions are weighing heavily. And with the talk of further tax hikes under Labour, that contraction might just be the beginning. So, will we see a base rate cut at the June's Bank of England meeting? Personally, I think they'll wait until the next meeting in August, but pressure is definitely building. This week tells us one thing. Tug of war between inflation control and economic slowdown is reaching breaking point. Borrowers need to stay alert. Rates are volatile, lenders' policies are shifting, and the government's role in the market is about to change again. If you're sitting on the fence, this might just be your signal to start exploring your options. So what do you make of this week's chaos? Are you worried about rising unemployment? Or were you one of the 53,000 that used the mortgage guarantee scheme? And are you still waiting for the perfect time to fix your mortgage? Please drop your thoughts in the comments because I'd love to hear them. And if you're unsure what all of this means for you, then feel free to message me directly. Things really are moving fast, so don't forget to like, share, and follow me so that you don't miss next week's update. Take care.